Welcome back to the Profitable Mindset podcast. We always say to treat trading like a business, and today we're really going to dig into what that means.
Yeah, you see those headlines about people making millions overnight, but for most of us, that's just not realistic.
Definitely not the norm, right? There's so much more to it than just picking the right stocks or, getting lucky with a trade.
Yeah, it's more like building a company.
Yeah.
You need that discipline and strategy, and you've got to always be learning.
I like that analogy. Thinking like an entrepreneur, not a gambler, right?
Exactly. Building a system, a process for consistent profitability instead of just chasing those quick wins that disappear just as fast.
So instead of just focusing on individual trades, we should be thinking about our trading as a whole as its own entity.
Yes. Think about it. You're the analyst, you're researching the markets, then you've got to put on your risk manager hat and protect your capital. Then you become the strategist, you're planning your moves, and then you're the operator actually making the trades.
So many roles all in one, right? It's like running a whole company, except it's just you.
Exactly. And just like any business, you need a plan.
So that's the trading blueprint, right? That's what you were telling me about earlier.
Exactly. It's like your trading constitution.
I like that. So where do we even begin with something like that?
You start with your why, what's driving you? What are you hoping to achieve with trading?
Is it financial freedom? Early retirement? Just growing your wealth?
Could be any of those things, but it's got to be something that really motivates you, that fuels your dedication to this.
Because this is a journey, right? It's not a get-rich-quick scheme.
Not at all. You've got to have that long-term vision, and then you break that down into smaller goals, specific, measurable, achievable, relevant, and time-bound.
So SMART goals.
Yeah. Instead of saying, I want to be rich, you say, I want to achieve a 15% annual return while keeping my maximum drawdown below 5%.
I like that it's measurable. You can actually track your progress and see if you're on the right path.
Exactly. It gives you a target to aim for, and it helps you stay disciplined.
Okay, so we've got our goals, our vision. Now let's talk strategy.
That's where we decide which markets we're going to focus on and what our approach will be to finding those profitable opportunities.
Because we can't be everywhere at once, right? We can't master every market.
Right. It's like choosing your battlefield.
I like that. So are we diving into the fast-paced world of Forex? Are we focusing on those company earnings reports in the stock market, or are we riding those crypto waves?
And each market has its own rhythm, its own quirks. You need to understand how it moves, what drives those price swings.
So much to learn.
Yeah, and then you've got to choose your weapons, your analytical tools. Are you going fundamental? Are you digging into those company financials?
Or are you more of a technical trader, reading those charts, looking for patterns and signals?
And then there's sentiment analysis too.
Yeah.
What's the mood of the market? What are people saying? Are they bullish? Are they bearish?
I find that so fascinating how you can actually measure sentiment and use it to your advantage.
Oh, absolutely. It's like getting a glimpse into the collective psychology of the market. What's driving those decisions.
So we choose our market, our tools, and then we build our watch list right. Those stocks or currencies or whatever we're going to focus on.
Right. You're curating your inventory just like a store owner. You choose those products, those assets that align with your strategy and offer the best potential.
No more chasing those random opportunities that pop up on your newsfeed.
Right. Focus is key. You got to be disciplined and stick to your plan.
And speaking of plans, let's talk about capital allocation. That's a big one.
It's like managing your trading budget like a CFO, making sure every dollar is working for you.
Because it's easy to just throw money at the market and hope for the best, right?
That's a recipe for disaster. You got to be strategic about it.
Yeah.
You need to understand your risk tolerance. How much are you comfortable losing on any single trade?
Yeah, that's a tough question to ask yourself. How much pain are you willing to endure?
Because losses are inevitable. They're part of the game.
And that's where those stop-loss orders come in, right?
Exactly. That's your safety net. It gets you out of a trade before it turns into a disaster.
So we're protecting our capital, but we also need to think about growing it right.
That's where reinvesting comes in, just like a business that reinvests its profits to grow.
And when those profits start to compound, that's when the magic happens.
It's like a snowball rolling down a hill. It gets bigger and bigger.
And we have to be mindful of those costs too, right? Commissions, spreads, data fees.
Absolutely. Those can eat into your profits if you're not careful.
So it's all about running a lean, efficient operation, maximizing profits and minimizing costs.
Now let's talk about finding your edge. What makes you stand out in the trading world?
That's your unique value proposition, your UVP, right?
Exactly. What's your superpower? What are you exceptionally good at?
Do you have a knack for spotting those breakouts before they happen? Are you a master of reading price action, or maybe you've developed a proprietary trading system that gives you an edge?
Whatever it is, you need to validate it, backtest it, make sure it's robust and can handle different market conditions.
Like a business doing market research before launching a new product?
Right, you got to make sure there's a demand for your product.
Okay, so now we're moving to the foundation of any successful trading business: risk management.
That's your insurance policy. It protects you from those inevitable losses and helps you preserve those hard-earned profits.
Okay, so what are those essential elements of a solid risk management plan?
We've already talked about defining your risk tolerance and setting stop-loss orders, but there's more.
Like diversifying our portfolio,
Yeah,
right? Not putting all our eggs in one basket.
exactly. You want to spread your risk across different assets, different markets, different strategies.
And then there's leverage, that double-edged sword.
Leverage can amplify your gains, but it can also magnify your losses.
So it's a tool that needs to be used with caution, especially for new traders.
Absolutely. You got to understand how leverage works before you start using it.
Now let's move from those technical aspects of risk management to the psychological side of things, because our emotions can really impact our trading decisions.
Oh, yeah. Fear, greed, hope, despair, all those emotions can cloud our judgment.
So how do we control them?
It's about developing that mental discipline, learning to recognize those emotional triggers and not letting them dictate our actions.
So it's about becoming aware of our emotions and then learning to manage them.
Exactly. You got to be the master of your emotions, not the other way around.
And to help us stay disciplined and execute those strategies effectively, we need the right tools and technology.
Just like any business, you need the right infrastructure to support your operations.
So what are those essential tools for a trader?
First and foremost, you need a robust trading platform. Your command center for analyzing those markets, executing those trades, and managing your positions.
I know there's so many platforms out there. How do you even choose?
It depends on your needs and your trading style, but you want a platform that's reliable, offers advanced charting features, and maybe even some automation capabilities.
And speaking of charts, you need good charting software.
Absolutely. You got to be able to visualize those price patterns, those trends, those support and resistance levels.
And an economic calendar that's essential too,
Yeah.
right?
Absolutely. You got to know when those major economic reports are coming out, those central bank meetings, those events that can move the markets.
Because trading is all about timing, right?
Absolutely. You got to be in the right place at the right time.
And you got to have your finger on the pulse of the market.
That's where news feeds come in. Those real-time updates on what's happening in the world, those events that can impact the markets.
And with so much information coming at us from all directions, we need to be able to organize it all.
Absolutely. That's where a good trading journal comes in. A place to record your trades, your thoughts, your observations.
So it's not just about tracking your wins and losses. It's about understanding why you made those trades.
Right. It's about learning from your mistakes and refining your approach over time.
I think a lot of new traders underestimate the importance of a trading journal.
It's one of the most powerful tools you can have. It helps you become a better trader.
So we've got our platform, our charts, our news feeds, our journal. What else do we need?
Let's talk about back testing.
Oh.
Before you launch any new strategy into the live market, you want to see how it would have performed historically.
So it's like a simulation, a way to test your strategy without risking real money.
Exactly. And there are tools that can help you do that.
And risk management calculators, those are helpful too, right?
Oh, absolutely. They help you determine the right position size based on your risk tolerance and your stop loss level.
It takes the guesswork out of managing risk.
Exactly. And if you're looking to take your trading to the next level, you might want to explore automation.
Automation, so like using algorithms or bots to execute your trades.
Exactly. They can help you improve your speed, your efficiency, and even remove some of that emotional bias.
So it's like having a tireless trading assistant working for you 24/7.
Right. They never get tired. They never get emotional. They just follow the rules.
Now let's talk about our trading workspace, because just like a business, we need a dedicated space to operate.
Absolutely. You want a space that's comfortable, organized, and equipped with the right tools?
So multiple monitors, a fast computer, a reliable internet connection, those are essential, right?
Absolutely. You don't want your technology to be a bottleneck.
And ergonomics are important too, right? You're going to be spending a lot of time in that chair.
You don't want to end up with back pain or carpal tunnel syndrome.
So make sure your workspace is set up for success.
Now that you have your tools and your workspace set up, it's time to establish a disciplined trading routine.
So it's like creating a well-oiled machine.
Exactly. You want to be consistent in your analysis, your execution, your review process.
So a typical routine might start with pre-market preparation, gathering intel, updating your watch list, planning potential trades.
Then comes a live trading session where you execute your strategy with focus and discipline.
And then after the market closes, it's time for the post-market review, analyzing those trades, updating your journal planning for the next day.
It's all about creating those habits, those routines that lead to consistent, profitable trading.
Speaking of which, even with the best tools and the best routines, the human element is still the most crucial factor in our trading success.
Absolutely. And that brings us to the topic of emotional intelligence. Understanding and managing those emotions that can make or break our trading journey.
Because we've all been there, right?
Yeah.
We've all made those emotional decisions that we later regretted.
Yeah, we get scared, we get greedy, we get frustrated, and it can all lead to those costly mistakes.
So how do we become more emotionally intelligent traders?
That's a great question, and that's something we'll dive into deeper in the next part of our discussion.
Welcome back to the Profitable Mindset Podcast. So we were talking about becoming more emotionally intelligent traders.
Yeah, because our emotions can really sabotage our best laid plans, right?
They can absolutely, it's like having a saboteur living inside your head.
That's a great way to put it. So how do we get rid of that saboteur?
Well, you can't completely get rid of it, but you can learn to manage it. One of the most effective tools is a pre-trade checklist. Okay, I've heard of those, but how does a checklist help with emotional control?
It's like your guardian angel. It forces you to slow down and think rationally before you make a trade.
So it's like having a series of questions that you have to answer before you click that buy or sell button.
Exactly. And those questions should be designed to bring you back to your plan. To remind you of your goals, your strategy, your risk management rules.
So it's like having that voice of reason whispering in your ear saying, hey, wait a minute, are you sure you want to do this?
Right, because in the heat of the moment, it's easy to get caught up in the excitement or the fear and make those impulsive decisions that you later regret.
So a pre-trade checklist can help us avoid those emotional traps.
Exactly. It's a simple but powerful tool.
I like it. What else can we do to manage our emotions?
Well, and mindfulness can be incredibly helpful too. Taking a few moments to breathe deeply, to center yourself before you start trading.
Yeah, I've heard that can really make a difference. It's like hitting that pause button and giving yourself a chance to reset.
And when those emotions do surface, and they inevitably will, acknowledge them, but don't let them control your actions.
So it's about being aware of those emotions, but not letting them dictate our trading decisions.
Right, because sometimes you might feel anxious about a particular trade, but if your analysis is sound and it aligns with your plan, you got to trust the process and execute the trade.
So it's about having that faith in our system, knowing that we've done the work, and not letting those fleeting emotions sabotage our plan.
Exactly. And speaking of those inevitable setbacks, let's talk about losses.
Nobody likes to talk about losses, but they're part of the game.
They are, absolutely. And I think the key is to shift our perspective on losses.
Instead of viewing them as failures, we should see them as learning opportunities.
Exactly. Every loss is a chance to analyze what happened, to identify those areas where you can improve your strategy.
So it's all about continuous improvement, right? Always striving to be better.
Exactly. And that brings us to resilience, that ability to bounce back from those inevitable setbacks.
Because trading can be a roller coaster ride, right? They're going to be ups and downs.
Absolutely. And the traders who succeed are the ones who can handle those downs, who can dust themselves off and get back in the game.
So how do we cultivate resilience?
Well, one of the best ways is to shift your focus from outcomes to the process.
So it's not about beating yourself up over a losing trade. It's about evaluating how well you executed your plan.
Right. Did you stick to your risk management rules? Did you follow your strategy with discipline? If the answer is yes, then you're on the right track, even if that particular trade didn't work out.
So it's those long-term habits, those consistent actions that ultimately lead to success.
Exactly. And speaking of the long game, it's important to set realistic expectations.
Yeah, because a lot of new traders come into this thinking they're going to get rich quick. And when that doesn't happen, they get discouraged and give up.
It's crucial to detach from those fantasies and understand that sustainable trading is about slow, steady growth, compounding those gains over time.
It's a marathon, not a sprint.
Exactly. And just like a marathon runner, you need to pace yourself. You need to take breaks. You need to recharge.
Yeah, burnout is a real danger in trading.
It is, absolutely. And it can lead to those emotional decisions that sabotage your progress.
So make time for those activities that bring you joy. Those hobbies, those connections with loved ones.
Those are the things that nourish your soul and help you stay balanced.
Now, another key aspect of emotional intelligence is self-awareness.
That's about understanding your own patterns, your triggers, those moments when you're most vulnerable to those impulsive decisions.
So it's like knowing your weaknesses those areas where you need to be extra careful.
Exactly. And a trading journal can be an invaluable tool for developing this self-awareness.
Because it's not just about recording our trades, it's about recording our thoughts, our feelings, our observations.
Right. Were you feeling confident? Were you feeling anxious? Were you feeling greedy? Those are all valuable insights.
And over time, you start to see those patterns, those situations where you tend to make those emotional decisions.
Exactly. And once you're aware of those patterns, you can start to manage them more effectively.
Now, while it's important to be aware of those negative emotions, we also need to tap into the power of positive psychology.
Absolutely. Celebrate those wins, those moments of disciplined trading, those times when you resisted the urge to break your rules.
So it's like rewarding ourselves for good behavior.
Exactly. It reinforces those positive habits and fuels your motivation.
I like that. And visualization can be helpful too, right? Picturing ourselves trading with calm and confidence.
Absolutely. It's like those athletes who visualize themselves winning the race.
So we're training our brains for success.
Exactly. And remember, trading is a journey of continuous learning and improvement.
We're never going to be perfect. There's always room for growth.
Absolutely. Embrace that growth mindset, that belief that you can always get better.
And remember to take care of ourselves physically and mentally.
Get enough sleep, eat healthy foods, exercise regularly.
Those are the foundations of a healthy mind and body.
And when things get tough, and they inevitably will have a psychological safety net in place.
So like a backup plan for when things go wrong.
Exactly. What are you going to do if you hit your maximum drawdown limit, if you have a string of losses, if you're feeling overwhelmed?
Maybe it's taking a break from trading. Maybe it's reviewing your journal. Maybe it's reaching out to a mentor.
Whatever it is, have a plan in place so you're not caught off guard.
And build a strong support network. Connect with other traders online or in person.
It's great to have people who understand what you're going through, who can offer support and encouragement.
Because trading can be a lonely business if you let it.
It can, absolutely, but it doesn't have to be.
Now let's imagine a typical day in the life of an emotionally intelligent trader.
Okay, so you wake up feeling refreshed after a good night's sleep.
Already off to a good start.
You start your day with a few minutes of meditation, clearing your mind, focusing on your breath.
Setting the tone for a calm and focused trading session.
You review your trading plan, you remind yourself of your goals, your strategies, your risk management rules.
So you're priming your mind for success.
Then you open your trading journal, you reflect on those recent trades, you notice any emotional patterns.
So you're bringing that self-awareness into the trading day.
Exactly. You're ready to face those markets with a clear head and a calm heart.
And during the trading session, you use that pre-trade checklist for every single trade.
You're not chasing those impulses. You're not letting fear or greed dictate your actions.
You're in control.
And as the day comes to a close, you take time for that post-market review.
Analyzing your trades, updating your journal planning for the next day.
It's a continuous loop of learning, refining your approach, pushing yourself to become a better, more emotionally balanced trader.
And that consistency, that commitment to the process is what sets apart those consistently profitable traders from the rest.
Absolutely. It's not about luck. It's about skill and discipline.
Now let's shift gears from mastering those emotions to another crucial aspect of building a successful trading business, meticulous record keeping.
Just like a CEO analyzing those financial statements, a smart trader tracks their performance.
It's about moving beyond those gut feelings and making decisions based on cold, hard data.
And the foundation of this data-driven approach is the trading journal.
We've talked about the journal as a tool for self-awareness, but it's also crucial for tracking our performance.
It's like your personal trading laboratory. This is where you experiment, analyze, and refine your approach over time.
So what should we be tracking in these journals?
It starts with the basics. The date and time of each trade, the instrument, whether you were long or short, your entry and exit points, and the profit or loss.
Okay, so the nuts and bolts of each trade.
Exactly, but it's not just about the numbers.
There's more to it than just the cold, hard data.
Absolutely. You also want to capture those qualitative data points, insights into your decision-making process.
So why did you enter the trade? What were those market conditions? How are you feeling emotionally?
It's about understanding not just what happened, but why.
So let's say it's November 20th, 2024, and I just closed a winning trade on the Euro USD. I made $200 on a long position. I'd note that down, but what else should I be capturing?
Well, you could note that your entry was based on a breakout above a key resistance level on the chart.
Okay, because that was the technical signal that triggered the trade.
Right, and you could also note that you're feeling confident and disciplined in your execution.
So I'm capturing the emotional state as well.
And maybe you even add a note to wait for a pullback confirmation next time before entering a similar setup.
So I'm already thinking about how I can improve my approach based on this trait.
Exactly. It's those little nuggets of wisdom that make your journal so valuable.
So it's not just a record of the past, it's a guide for the future.
Exactly. It's a roadmap to success.
But it's not just about recording, it's about regular review and analysis, right?
Absolutely. Make it a habit to review your journal daily, weekly, and monthly.
So daily, I'm reflecting on those recent trades, looking for those patterns, those emotional triggers, those subtle market cues I might have missed.
And weekly, you're looking at those broader performance metrics. How's your win rate? What's your average risk-reward ratio? Or your drawdowns in check?
And monthly, I'm taking that deeper dive into those long-term patterns. Am I on track to meet my financial goals? Do I need to make adjustments to my overall plan?
It's like those regular checkups with your doctor. You're making sure everything is running smoothly.
Now we're fortunate to live in a digital age where we have so many tools to help us keep those trading records organized and accessible.
Absolutely. You have those classic manual journals, but you also have those dedicated trading journal software like Edgewonk or TraderView.
And for those Forex traders, there's MeFX book,
Yeah.
which automatically tracks your trades and provides in-depth analytics.
So many options to choose from.
Now, as we dive into these metrics, what are some of those key figures that we should be watching?
Well, your win rate is a good indicator of your strategy's overall effectiveness.
So that's the percentage of winning trades.
Exactly. And then you have the risk-reward ratio, which tells you how much you're potentially gaining for every dollar risked.
So the higher the risk-reward ratio, the better.
In theory, yes. But you also have to consider your win rate.
Because you could have a high risk-reward ratio, but a low win rate and still end up losing money.
Exactly. It's all about finding that balance.
Okay, what other metrics should we be tracking?
Well, your average profit and loss figures give you a sense of your typical win and loss sizes.
So it's important to know how much you're making on your winners and how much you're losing on your losers.
Absolutely. And maximum drawdown is crucial for understanding your risk exposure.
That's the largest peak to trough decline in your account, right?
Exactly. It tells you how much you could potentially lose in a worst-case scenario.
And then there's expectancy, which is the average expected return per trade.
That's a statistical measure of your edge in the markets.
So it's basically telling you whether your strategy is profitable over the long run.
Right? It takes into account your win rate, your average win size, your average loss size, and it gives you a single number that represents your expected profit per trade.
Now, we all love those winning trades, but what about those losses? How do we analyze those?
Don't brush them under the rug. Dive into them, figure out what went wrong, extract those lessons.
So it's like a post-mortem examination where we're trying to determine the cause of death.
Exactly. Was it a flaw in your strategy? Did you break your risk management rules? Were you being impulsive?
So it's about that honest self-reflection.
And it's not always easy. Sometimes it's painful to look at those losing trades, but it's essential for growth.
Because if we're not learning from our mistakes, we're doomed to repeat them.
Absolutely. And that's why record keeping is so important. It brings accountability to your trading.
It forces us to confront those mistakes and make those necessary adjustments.
Exactly. And as you analyze those patterns, you start to see those blind spots, those areas where you can improve.
It's about moving from intuition to data-driven decision-making.
Exactly. And your journal is your guide on that journey.
Yeah. Now, as we gain experience and see those results, it's natural to think about scaling our trading business.
Just like a company expanding its operations, a successful trader can systematically grow their trading activities.
But it's not about recklessly increasing our risk, right?
No, it's about strategic, controlled growth built on a solid foundation of performance and risk management.
So how do we know when we're ready to take things to the next level?
Well, the first and most important indicator is consistent profitability.
So we're not just talking about a few lucky trades. We're talking about consistent profits over several months or even years.
Exactly. You want to make sure that your success is not just a fluke.
And our risk management needs to be rock solid, right?
Absolutely, because as you scale, those potential losses increase.
So those stop loss orders, those position sizing rules, those risk per trade limits, they all become even more critical.
Exactly. You got to make sure your risk management system can handle those larger trade sizes without jeopardizing your capital.
And emotional resilience is important too, right?
Absolutely, because as you scale, those emotions get magnified.
So you need to be able to handle those larger swings in your account without letting those emotions cloud your judgment.
Right, because fear and greed can really take over when there's more money on the line.
So before we even think about scaling, we need to make sure we have those three things in place: consistent profitability, rock-solid risk management, and emotional resilience.
Exactly. Those are the foundations of sustainable growth.
Okay, so let's assume we've ticked all those boxes. We're feeling confident and ready to scale. What are some strategies to consider?
Well, one approach is to gradually increase your position sizes as your account grows.
So let's say I'm trading with a $10,000 account, and I'm risking 1% per trade, which is $100.
Right, and as your account grows to $12,000, you could increase your position size proportionally, still maintaining that 1% risk.
So instead of risking $100 per trade, I'm now risking $120.
Right, you're capturing larger profits while keeping that risk percentage consistent.
Okay, I like that it's a gradual approach.
And don't forget to reinvest those profits. Compounding is your best friend.
The snowball effect.
Exactly. Let those profits generate more profits.
Now, what other scaling strategies can we use?
Well, you can also diversify your strategies as you scale.
So instead of just sticking to one approach, we might want to add a few more tools to our arsenal.
Exactly, because different strategies work better in different market conditions.
So if we've primarily been trend following, we might want to explore mean reversion strategies to capture those profits in those range-bound markets.
Right, and you can also consider expanding into new markets.
So a Forex trader might explore stocks, or a stock trader might venture into commodities.
It's all about expanding your opportunities.
And leverage can be a tool for scaling as well, right?
It can, but it's a double-edged sword, so proceed with caution.
Because leverage can amplify your gains, but it can also magnify your losses.
Exactly, and if you're not careful, leverage can wipe out your account.
So slow test the waters and gradually increase leverage only when you're completely confident in your ability to manage that additional risk.
Exactly, don't get greedy.
Now, as we scale, we might also want to leverage technology to streamline our processes.
Absolutely. Automated trading systems can handle those larger orders with precision.
And advanced analytics platforms can provide those detailed performance reports.
It's like upgrading your business software.
Now, as exciting as scaling is, risk management is more important than ever.
Absolutely, because as your account grows, those potential losses increase.
So it's easy to lose sight of those risk percentages when you're focusing on those bigger numbers.
Right, it's like getting a raise. You know, you might be making more money, but if you're spending more money as well, you're not actually any richer.
So we need to stay disciplined, stick to our risk per trade, and make sure we're not overexposing ourselves.
Exactly. And as you diversify your portfolio, make sure you're not concentrating risk in correlated assets.
So if you're long both the euro and the British pound against the US dollar, and the dollar strengthens both positions, could take a hit simultaneously.
Right. It's like putting all your eggs in one basket.
And as you scale, stress test your systems.
Absolutely. You want to simulate market shocks, those worst-case scenarios.
What if there's a flash crash? What if there's a sudden surge of volatility? What if there's a black swan event?
By thinking through those scenarios, you can identify those vulnerabilities in your system and make those necessary adjustments.
So we're prepared for the unexpected.
Exactly. And that trading journal becomes even more crucial as you scale.
Because we're tracking those scaling-specific metrics. You know, how are those increased position sizes impacting our performance? Are those new strategies or markets adding value?
Exactly. You're constantly monitoring, evaluating, and refining your approach as you scale.
Now let's talk about the psychological challenges of scaling.
Yeah, because as those trade sizes increase, it's natural to feel more pressure.
Those anxieties, those doubts, they can really start to creep in.
But remember to focus on those percentages rather than those dollar amounts.
Because if you're managing your risk, a larger loss in dollar terms might represent a small percentage of your account.
Exactly. It's all about perspective.
And be wary of overconfidence.
Success can breed complacency.
So just because you've had a few winning trades in a row, don't start thinking you're invincible.
Right. Stick to your plan. Review your risk management rules and stay grounded.
Remember that trading is a marathon, not a sprint.
Exactly. Focus on the process, execute with discipline, and the results will follow.
Now let's shift gears from scaling to building a trading legacy.
A legacy. So it's not just about making money, it's about building something that lasts.
Exactly. It's about creating something meaningful, something that you can be proud of.
It's about using your trading skills to make a positive impact on the world.
I like that. So how do we build a trading legacy?
Well, it starts with embracing the long-term perspective.
So we're not just thinking about the next trade or the next month or even the next year. We're thinking about the next decade or even the next generation.
Exactly. We're thinking about how our trading can create a better future for ourselves and for others.
So what are some of the key pillars of building a trading legacy?
Well, first and foremost, never stop learning.
The markets are constantly evolving, so we need to evolve with them.
Exactly. Read books, attend conferences, connect with other traders. Never stop expanding your knowledge.
And risk management and diversification, those are essential too, right?
Absolutely. Those are the foundations of sustainable trading.
Because we want our legacy to be built on solid ground.
And adaptability is crucial as well.
Because the markets are always throwing us curveballs.
Exactly. You need to be able to adjust your strategies, your risk management, your mindset as conditions change.
So it's about being flexible, being willing to change course when necessary.
Exactly. And embrace technology.
There are so many tools and platforms out there that can help us become better traders.
Use them to your advantage.
Now, another important aspect of building a legacy is taking care of ourselves.
Our physical health, our mental health, our emotional well-being.
Because if we're not taking care of ourselves, we're not going to be able to trade effectively.
Right, and we're not going to be able to enjoy those fruits of our labor.
So make time for those activities that bring you joy. Spend time with loved ones. Pursue those hobbies that nourish your soul.
Because trading should enhance your life, not consume it.
And as you achieve success, consider giving back to the trading community.
Share your knowledge mentor. Those aspiring traders pay it forward.
Because we're all in this together, right?
Absolutely. And by helping others, we lift up the entire community.
Now let's talk about the transition from trader to investor.
So it's not just about trading forever. It's about building a portfolio that can generate passive income.
Exactly, because ultimately we want to achieve financial freedom.
Right? That's the goal. And trading can be a means to that end.
But it's not the end itself.
Right. Once you've achieved a certain level of success, you can start thinking about transitioning some of your capital into those long-term investments.
Like real estate index funds, dividend-paying stocks.
Those are all good options.
And as you build your legacy, track your progress, not just in terms of profits, but also in terms of personal fulfillment and impact.
So it's not just about the numbers, it's about how your trading is impacting your life and the lives of others.
Are you achieving your goals? Are you living the life you want? Are you making a positive difference in the world?
Those are the questions that really matter.
And remember, building a legacy is a lifelong pursuit.
It's a journey, not a destination.
There will be challenges and triumphs, setbacks and breakthroughs.
But if you stay true to your principles and never stop learning, you can achieve amazing things.
So let's talk about some of those potential pitfalls on this journey of building a legacy.
Well, complacency is a big one. You know, once you start achieving some success, it's easy to get comfortable and let your guard down.
Yeah, we start thinking we've got it all figured out.
And that's when we make those mistakes.
So we need to stay humble, stay hungry, stay disciplined.
Absolutely never stop striving to be better.
And market conditions are constantly changing, so we need to be adaptable.
Don't get stuck in your ways. Be willing to adjust your approach as needed.
Because what worked yesterday might not work today.
Exactly. And be mindful of burnout.
Trading can be a demanding profession.
Take breaks, recharge, spend time with loved ones.
Because if you're not taking care of yourself, you're not going to be able to trade effectively.
And you're not going to be able to enjoy your success.
So it's all about finding that balance.
Now let's talk about networking and collaboration.
Because trading doesn't have to be a solitary pursuit.
Absolutely. The power of community can be transformative for traders.
So why is networking so valuable?
Well, for starters, it's about shared knowledge. You know, tapping into that collective wisdom, learning from those who have walked the path before you.
It's like having a team of advisors, a brain trust that you can tap into for insights and guidance.
Exactly. And it's also about getting exposed to new perspectives, new strategies, new tools.
Because we all have our blind spots.
We do. And by connecting with other traders, we can expand our horizons.
And networking can provide emotional support as well.
Absolutely, because trading can be a tough game.
There are going to be losses, there are going to be setbacks, and it's great to have people who understand what you're going through.
Who can offer support and encouragement.
And networking also provides accountability.
When you share your goals with others, you're more likely to achieve them.
It's like having a workout buddy, someone who pushes you and motivates you.
Exactly. So now that we've talked about the why of networking, let's talk about the where.
Where can we connect with other traders?
Well, online trading communities are a great place to start.
Forums, social media groups, platforms like Reddit or Discord.
There are so many options to choose from.
And if you prefer those face-to-face interactions, you can look for local trading groups.
Websites like Meetup or Eventbrite are good resources for finding events in your area.
And don't forget about those professional organizations and conferences.
Those can be great opportunities to connect with other traders, learn from the experts, and discover those new tools and technologies.
They can be expensive, but sometimes it's worth the investment to attend those events and really immerse yourself in the trading world.
Oh, absolutely. You get to meet those people face to face. You build those relationships.
And we can't forget about social media in this day and age.
Social media is huge for traders. Twitter especially, you can follow those experts, those market gurus, get those real-time insights.
It's like having a direct line to those brilliant minds.
And you can also connect with other traders, share ideas, ask questions, get feedback.
And if you're feeling really ambitious, you can create your own content. Share your knowledge with the world.
Build your own brand, become a thought leader in the trading community.
Okay, so we've talked about the why and the where of networking, but what about how do you network effectively?
Well, first of all, be authentic. Be yourself. Don't try to be someone you're not.
People can spot a fake a mile away.
They can, and be proactive.
Yeah.
Don't just sit back and wait for people to come to you.
You got to put yourself out there and engage in those conversations, share your insights.
And offer value. What can you bring to the table? What can you teach others?
Because networking is a two-way street.
It is, absolutely. And focus on building genuine relationships.
Not just transactional ones.
Right. You want to connect with people who you can learn from and who can learn from you.
People who you can trust and who can trust you.
And be open to learning. Be receptive to feedback, even if it's not always positive.
Because we can all learn from each other.
No matter how experienced we are.
Now, collaboration can take many forms in trading.
You might partner with another trader to develop a new strategy.
Two heads are better than one.
Sometimes, yeah, especially if you have complementary skills.
Like a technical analyst partnering with a fundamental analyst.
Exactly, combining those different perspectives.
Or you might collaborate on research, share data, share ideas.
Or even just share resources, like trading tools or market data subscriptions.
Because those things can get expensive.
They can, and if you have a group of traders that you trust, you can even explore signal sharing.
So you're exchanging trade setups, entry and exit points.
But proceed with caution.
Yeah, because you're essentially putting your trust in someone else's judgment.
Right. So make sure you do your own due diligence before you follow anyone's signals.
Now, let's talk about some of those tools that can help us connect and collaborate with other traders.
Well, many trading platforms incorporate social features.
So you can connect with other traders right there on the platform.
Exactly. Follow their trades, share ideas, even copy their strategies.
And video conferencing tools like Zoom or Microsoft Teams have become essential for networking.
You can host webinars, group discussions, mentorship sessions.
And collaborative tools like Google Sheets or Slack are great for group projects, brainstorming research.
So many options to choose from.
Now let's take a moment to appreciate those success stories. Those examples of how networking and collaboration have transformed trading journeys.
We see those partnerships forming where traders combine their strengths and create something truly special.
Like those power couples in business.
Exactly. And mentorship is another powerful form of collaboration.
Where experienced traders share their knowledge and guidance with those who are just starting out.
It's a beautiful thing to see.
In trading groups, those communities where traders support each other, learn from each other, and grow together.
It's amazing how much you can achieve when you're part of a supportive community.
So if you're feeling isolated, if you're feeling lost in your trading journey, reach out, connect with other traders, build those relationships.
It's one of the best things you can do for your trading career and for your personal growth.
Now, this final part of our discussion, we need to talk about adaptability because the markets are constantly changing.
They are, absolutely. The only constant is change.
And if we're not able to adapt, we're going to get left behind.
Exactly. So why is adaptability so important?
Well, we've talked about having a plan, having a strategy, but what happens when the market throws us a curveball?
You got to be able to adjust.
Because those strategies that worked yesterday might not work today.
Exactly. So you got to be flexible.
So what are some of those factors that drive change in the markets?
Well, there are those market cycles. Those bull markets, bear markets, sideways markets.
And each market environment requires a different approach.
Right. And then there's volatility.
Sometimes the market is calm and predictable. Other times it's wild and chaotic.
And you need to be able to adjust your trading style to those different levels of volatility.
And there's liquidity.
Sometimes it's easy to get in and out of trades. Other times it's like trying to navigate a crowded dance floor.
And we can't forget about technology.
Technology is constantly changing the trading landscape.
New platforms, new tools, new algorithms.
We got to stay ahead of the curve.
And then there are those regulatory changes.
Governments are always tweaking the rules of the game.
So we need to stay informed and make sure we're in compliance.
And of course, there are those global events, those unpredictable black swan events that can throw everything into chaos.
Like pandemics or wars or financial crises.
You never know what's going to happen.
So how do we develop that adaptability muscle?
Well, it starts with recognizing the signals that the market is shifting.
So those technical signals, those fundamental indicators, those sentiment indicators.
And your own trading performance.
If your strategies are no longer working, it's a sign that you need to adapt.
Exactly. So how do we adapt our strategies to these changing conditions?
Well, one way is to diversify our techniques.
Don't rely on a single strategy. Have a toolkit of approaches.
So we can choose the right tool for the job.
And adjust your position sizes as volatility fluctuates.
Increase those positions when the market is calm, reduce them when it gets choppy.
And adapt your risk management rules as well.
Widen those stop-loss levels when volatility increases. Adjust those take-profit targets.
And never underestimate the power of new tools and technologies.
Explore those new platforms, those new indicators, those new algorithms.
Because those innovations can give you an edge.
And if you're a long-term investor, adapt your portfolio as well.
Rebalance those asset allocations, shift those weightings.
Because what worked in the past might not work in the future.
And stay informed.
Read those financial news. Follow those industry blogs. Attend those webinars. Listen to those podcasts.
The more you know, the better prepared you'll be.
Now, technology can be a powerful ally in our quest for adaptability.
Backtesting tools can help you experiment with different strategies.
And real-time analytics platforms can provide those live data feeds.
And if you're using algorithmic trading systems, you can adjust them to incorporate those changing conditions.
So they remain effective.
And economic calendars can help you stay ahead of those market-moving events.
So you can plan your trades accordingly.
Now, adaptability is not just about those technical adjustments, it's also about psychological flexibility.
So it's about embracing change.
Understanding that change is inevitable.
And viewing change as an opportunity for growth.
Be patient.
Those adjustments might not produce immediate results.
Give those new strategies time to play out.
And when setbacks occur, embrace them as learning opportunities.
Analyze those mistakes. Extract those lessons.
And come back stronger.
Most importantly, detach from those emotional biases.
Let data analysis and your plan guide your decisions.
Now let's look at some real-world examples of traders adapting to those major market shifts.
Okay, I like those real-world examples.
The 2020 COVID-19 pandemic was a perfect example.
The markets went haywire.
Volatility spiked, liquidity dried up.
It was a trader's nightmare.
But those traders who adapted quickly, they survived.
They shifted to defensive sectors, they moved to cash, they reduced their risk.
And some of them even thrived.
The rise of cryptocurrencies was another major market shift.
It created a whole new asset class, a whole new set of opportunities.
And those traders who were willing to learn and adapt, they were the ones who profited.
And the aftermath of the 2008 financial crisis was another game changer. Central banks flooded the markets with liquidity. Interest rates went to zero.
It was a whole new world.
And those traders who clung to those old assumptions, they got left behind.
So how do we build that system, that framework for continuous adaptation?
Well, it starts with establishing a routine of regular reviews.
Weekly, monthly, quarterly.
Take the time to step back, assess those market conditions, analyze your performance,
And identify those areas where you need to adapt.
and never stop learning.
Treat your trading education as an ongoing investment.
And network with other traders,
Share those insights, those experiences, those challenges.
and consider scenario planning.
Think about those what-if scenarios.
What if inflation surges? What if a recession hits? What if a war breaks out?
By thinking through those scenarios, you can prepare yourself mentally and emotionally for those unexpected events.
Remember, adaptability is not just a skill, it's a mindset.
It's about embracing uncertainty.
Viewing change as an opportunity.
So as we wrap up this discussion about treating trading like a business, let's recap those key principles.
Okay, so first of all, develop a solid trading plan.
Your blueprint for success.
Manage your risk like a professional.
Protect your capital.
Master your emotions.
Don't let fear and greed sabotage your decisions.
Track your performance meticulously.
Use that data to improve your approach.
Scale your trading strategically.
Grow your business responsibly.
Build a strong network.
Connect with other traders. Learn from them. Support them.
Embrace adaptability.
The markets are constantly changing, so you got to be able to change with them.
And never stop learning.
Trading is a journey of continuous improvement.
So if you can embrace those principles, you can achieve amazing things in the trading world.
Absolutely. Well, thank you so much for sharing your wisdom and insights with us today.
It's been my pleasure.
And to all our listeners, thank you for joining us on this episode of the Profitable Mindset Podcast. Remember, treat your trading like a business, and it will reward you in ways you never imagined.